All right. We are live. Let's see if everything works out. We got good sound. We good. My people. We got a nice stream ahead of us. Today we're going to talk about breakouts. Sorry, not breakouts. Candlesticks. We're going to talk about candlesticks. What candles are. And tomorrow we're gonna go deeper into how to read candles and like how you can spot reversals, how you can spot market structure, the creation of market structure through candles. But today we're going to focus on what candles are, and we're going to focus on different types of orders in the market. Why is that? Why am I going to back to the basic stuff? Is because I'm getting a lot of questions on that. So I focus on this whole boot camp has been a focus on answering the most common questions that I get, so that people starts to understand trading and understand the most basic aspects of trading. So it's easy to start talking about the complicated stuff and dive into the nitty gritty. But this is the bread. This is the foundation in trading. This is what you gotta know. So with that said, we're jumping into it straight. What is candles? What are candles in trading? Candlesticks that's what it's called. Let's go into the XRP chart because it's more clean, and let's look at it. All right, cool. So what is a candle? What you see in here, this is a candle. All right. Snap, what's going on with that? So this here, candle. All right. Now, on this candle, what you have is wait, let me check this. You have a candle wick. Let's do this nicer. So wick, body. But then also you have opening and closing. I'm gonna type it all down so you see it nice and clear. Opening and closing. All right, let's type it down. Wick. This is the candle wick. This is the body, the candle body. This here is closing. And this here is opening. Now we're going to talk about, opposite. Opening, closing. So we're going to talk about a bullish candle first, a green candle. So green candle most often represent bullish candles, but it doesn't have to be green. A lot of people keep them white, black, blue. You can change colors in your settings. So, but that is not important in this case. The important thing is for you to understand what it is you see. So first off, this is a candle. All of this represents a candle. But you have the wick coming out here, right? And what it is this. So this candle opened where this one closed. Now this is a bearish candle, so we're gonna talk about it very soon. First, we talk about the bullish candle. So this candle closed down here. Where this candle closed, this candle opened. It opened down here and closed up here. So therefore the candle body, the body represents the opening till closing. All right. Now, what does the wicks represent? The wicks represent the candle's moving range during that open time. So this is the time the candle been open. It opened here, it closed up here. But while it was open, let's say it opened here, maybe it moved down first. The first thing that happened was it continued to move down, and then it came back up here to retrace a little bit. It has a little wick here. Retrace a little bit and close here. When this one closed, the next one opened and closed down here. So I hope you're with me here. Candle open here, candles open here, goes down, creates this wick, but then moves up again and closes up here. Therefore, this is the body and this is the wick. This is the moving. The wick represents the moving range outside the opening and closing range that's been during this candle's lifetime. And we're going to talk about lifetime very soon. First, we're going to look at a bearish candle. So this was a green bullish candle. Now let's look at a bearish candle. Bearish candle, same thing, but the opposite. Let's look at one that has 2 weeks. 2 weeks. This one has 2 weeks. So, just to simplify it, let's continue. So, as I said, this one opens here, moves down, comes back up, closes. Now where this one closes, where the green one here closes, when this one closes, the next candle opens where the last one closed. All right. So you see this one opened exactly where this one closed. All right. Opened. Let's do like this. Opened here. And closed here. All right. So the green candle, the bullish candle, opened down here and closed up here. That means for it to be a bullish candle, it has to close at a higher price level, at a higher price target than it opened. All right. So it closed more expensive basically than it opened. Price went up. Now for it to be a bearish candle, it's the opposite. It opens here where the last bullish candle closed, and it closes underneath. So it closes underneath the opening price. It means it has gone down in price. So this one goes down in price and closes on a lower price level than it opened. All right, bullish candle, open and close above the price that it opened at. Bearish candle, open and close below the price that it opened at. And the wicks, as I mentioned, represents the movement of the candle. So let's look at this one, for example. So this one has 2 wicks. All right, we have this wick and we have this wick. And what the candle did is this one opened and closed below, right? Next one, this candle opened and closed at the lower price. Therefore, a red candle. But when it opened, it moved maybe up first, then it came down and retraced back and closed here. And therefore, you see wicks representing the whole body, the whole candle movement during its lifetime. Now, if you got that, or if you didn't get that, type it in the chat box. I repeat it. So now you know the opening and the closing during a candle's lifetime. Now, what is a candle's lifetime? and we're looking at time frames. So what we're looking at here now is a 1 hourly time frame. It's the 1 hourly time frame. That's why you see the 1H is the 1 hour. I can put the 4 hourly time frame, then every candle will represent 4 hours. So basically, let's say this one opens here now. It will close 4 hours later. So what you see on the candle in the candle body with the whole candle is the movement during these 4 hours it was open. All right. And where it closes after those 4 hours, if it's a bullish candle, then you see that's the top of the body. If it's a bearish candle, it's the bottom of the body where for the open and close range. So it opens here, close here, all right? So if it's a 4 hourly time frame, the candle body represents 4 hours. If it's sorry, not the candle body, but the whole candle. If it's an hourly time frame, the candle represents 1 hour. This is what happened during its hourly time frame. If it's 50 minutes, then the candle represents 50 minutes. Every 50 minutes, it will form a new candle and a new candle and a new candle. So I hope you got that, people. And if you didn't get it, type it in the chat box. Tomorrow, we are going to talk about reading candles. We're going to talk about reading candle patterns, and different types of candles, and what you can make out of them. So, for example, shooting star, hammer. There are different names to them. Doji, spinning top, and they represent different things in the market. And some of them are very good for spotting reversals in the market. So it's good to understand, like, at least the basics of them. So we're going to go through that tomorrow. But now let's jump from candles to orders. Why am I going from candles to orders? It's because I get a lot of questions on that. So I wanna make that clear once and for all, so we ain't getting no mistakes on the trades. Now, what types of orders are there? So there are market execution orders, and that is basically you're buying and selling with a market execution. So it means you're buying and selling right now, and your broker will fill your order as fast as possible with the closest order there is available for whatever, if it is a buy, if it is a sell. But that is an execution that is happening right now, market execution. Then you have stop and limit orders. So we have stop orders and you have limit orders. Market execution is now. All right. Now, what is stop and limit orders? Stop and limit orders, once you get it, you get it. I remember way back when I couldn't understand limit orders. It was difficult for me. And once I got it, I got it. It's actually quite simple. So let's say you place a sell limit here. Sorry, a buy limit, I mean, here, down here. All right. Let's say we put in a buy limit here. So it means when price comes down to, let's put a nice round number. All right. So when price comes down to 0.38700, we want to enter the market. Now, if this was a sell limit, if this was a sell stop, when the market would pass this zone, we would enter a sell. This is a buy limit, so it means that when market has to pass this zone first, our buy limit zone, our buy limit level has to pass it downwards first and then come back up. So a limit order, it basically catches, it triggers the order on it when the market moves up again and passes that area. All right. So let's say this market retraces, it passes our entry zone, no worries, because it won't trigger it. Let's say it's coming all the way down here. Nothing will happen with our limit order. Nothing will happen until it moves in this direction and passes. So it moves in the buy direction, in the correct direction. When we're in a buy limit, when it moves in the buy direction, so when it moves upwards and passes our buy limit level, then our order is triggered and we are coming into the market. This is an automatic order that you can put on your MetaTrader, or if you have a Vantage broker that uses their own platform, or any other platform that you use. You can always put buy limit, sell, buy stop, sell stops. So very important to understand this, because I'm going to talk about a buy stop order next. So it's important that you understand what a buy limit is. So buy limit is we want to go into a buy down here at this level at 0.38700. All right, that's where we want to enter a buy, but we don't want the buy to be triggered on the market's way down. We want the buy to be triggered on the market's way up. All right, so on the market's way up, when the market moves in the right direction, when it passes our limit, our point of entry, then the limit order triggers, and we are in the market. Now, let's look at buy stop. Buy stop, still looking for buy, of course, and we're still looking for buy order, but this is now when market passes through. All right, so for example, you cannot do a buy stop order here. Like most brokers, it won't even work. Like you will just get this sound that it didn't work. So you cannot put a buy stop here. Here you can only put a buy limit, because market has to come down and then come back up and trigger the order. For it to be a buy stop, market has to be underneath the entry level, and when it passes through, boop, triggers the order. That's a buy stop. Now, sell limit, same thing, but reverse. Let's talk about it. So let's say I have a sell limit order here. This is a sell limit. And we don't want the order to be triggered when market goes in the wrong direction, right? So we are waiting for the reversal, and when market moves in the right direction. So market moves, boom, 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 it does its thing, and then it starts to move in the right direction. When it passes our sell entry level, the order triggers, and we are in the market. Hope everybody got that. What is a sell stop? Sell stop, same like buy stop, but same thing again, the opposite. So, sell stop, market, the stop order first and foremost has to be underneath where the market price right now. So when the market moves and passes the sell entry level that you have placed in your sell stop order, the stop order will be triggered, and you will be in the market. You are entering the market. So sell stop, market is above the entry price, the order price, and when market passes through in the right direction, it will trigger the order. Sell limit, market is below. Market is below the order entry level, and when market passes through in the wrong direction, nothing will happen. But when it comes back down and moves in the right direction, it will trigger the order, and you are in a sell. So that is buy stop, buy stops, buy limits, sell stop, and sell limits. I hope everybody got that. Hope you understand. If anything, let me know in the chat. And with that said, what do? We look at the markets. Let's jump into it. Let's see what's going on here. So let's start with Bitcoin. Let's look at Bitcoin because we got an active trade going on there. I called this trade out yesterday, and you can see the trade here also. So I called it out yesterday. It went perfectly in our direction. What did it do? Why did I call it out? What was our entry signal, our entry confirmation that we needed, that I was looking for in this case? It was this here. We broke out of this structure. We broke out of this structure here and bounced off the 23.6 Fibonacci retracement, came back up and retested for a second time this structure as resistance. So this trend as resistance. It was acting as support all the way here, broke out, came back, retested it as resistance. That was our cue to entry. And I know, and confluently with that, we had a lot. We had some different stuff. We had the EMA confluently with that. We had the fibs. So it's not just looking at a channel and like, oh shit, it broke out, it retested. Now we're inside a cell. It's more to it. But, and I know some of you get it, understand it. Some of you are not. If you don't understand it, then watch the whole boot camp that I've recorded. You'll find it in the Bootcamp playlist on the Prosperous channel. And watch it through and watch the breakout and retest section. I think it's day 4 or day 5 when I'm talking about it. Study that and you will learn it. You will learn to understand this. We got some more days left on the bootcamp. We got some more things to cover, but today was candles, today was order types, and we're done with that because I want to have time to look into some trades together with y'all. So this happened and we went into a sell. The sell went perfectly in our direction, barely in the drawdown, and we already at TP2. TP3 is at 23,300. If I remember it correctly, I think we had it here. Let me see. Yeah, 23,360 US dollars is for TP3. So we are TP2 now. The stop loss is at break even. So this is a safe trade in profit. So congratulations to everybody that took it. And if you didn't take it, make sure you're in the Telegram group, on the Telegram channel, link in the description box, so that you will be on top of these trades. So Bitcoin, we're done with that. We let it do its thing. I'll go to Manara and see if we can find anything for Bitcoin there, because I'm actually looking for a bigger move on Bitcoin. Now this is a small move here, to be honest. What I'm looking for, let's clean it up a little bit here. We don't need all that stuff. It's good to not to have too much FUD on the charts. So what I think, like looking at bigger price levels, the first thing I see for Bitcoin is that I think we will come and test this bottom of this channel. So we have two channels here. We have the small one, We'll probably test that one too. we have a stronger one here that I think we got to come down and test. Why I think we got to come and test that one? Because we got a lot of liquidity here, and I believe that we're going to want to clear that liquidity. As you see, where do we have the demand? Where do I always say the demand is? Between the 78.6 and the 88.6 Fibonacci retracement. That's these two red lines that you see here. All right. Now this demand zone is perfectly confluent with the bottom of this trend here. So with the support of this trend, as I always say, trends are basically sloping supports and resistance. So this is a sloping support, and this conflues perfectly. So what I want to see now is this price to come all the way down here and test this structure again. Well, not again, because this is when the structure was created, and now we're going to test it and see if it holds. If it don't hold, next level is the 127.2 Fibonacci extension, but we're not there yet. We got to see this thing happen first. So let's see if this thing happens, and we take it from there. First target on our list is our take profit target, and it's right here at the sweet spot. That's the take profit 3. If that happens, you keep the take profit 4 open, and I would keep it open until the 78.6 Fibonacci retracement. So the top of the demand zone. I will keep it open all the way there. That's where I will put my take profit 4. And then, we can actually stay on Bitcoin, because I believe I see more action coming there in the recent future. So in the recent future, what do I see? I think that Bitcoin actually is going to drop down all the way to about like at least 15,000 again, but I think 11,000. So I see the Bitcoin price coming down to this level here. I have an old recording on this channel where I break down why I think price is coming down to this area. But just to put it shortly, same thing as I mentioned here, supply and demand, and we got a major demand zone here, major demand zone. And this is not just based on technical analysis, but also on-chain data. We got a lot of buy limit orders there. So back to the different order types. We got a lot of buy limit orders laying here. Between 10,000 and 15,000 is where we got a lot of buy limits. So that's that. So I can definitely see the market coming down all the way here. But first, we focus on this area. We focus on the trade that we're in, and we let it run. When we come down here, we make a new analysis and see if we will still be sell bias, or if we're looking for a retrace back up again before we see that major drop. Now, with that said, let's look at gold. Let's look at gold. Yesterday, we were looking for this trade to happen. The only thing was that it never happened, because for this trade to happen, we wanted the market to come down here to our entry level. This was our entry level. It never did, as you see. It came, sniffed at it, and went back up again. So this trade for now is invalid. We let him be like that. I still see major support here. So if market comes down, from here down, then I definitely see it doing at least a hiccup here. Like something will happen there. Probably some support, a bounce off, or support, and we're looking for a breakout, a breakthrough, and then we continue down. a lot of fundamentals playing into that. So still, I don't see anything for this zone right here. What is happening right now with gold is that we are ranging. It's actually interesting. So we are ranging between the 23.6 and the 38.2 Fibonacci retracement. And the retracement is from, or the Fibonacci is pulled from this bottom to this top. And then we have this whole retracement that came into the sweet spot zone here and moved back up again. And now it's ranging between the 23.6 and the 38.2 Fibonacci retracement. So it's ranging between these two blue lines here that you see. And basically, before we can picture anything happening here, we need to see a breakout from this level. So I think when we see a breakout from I would say this zone right here, and I would argue this zone right here. So we need to see a breakout. When I say a breakout, what do I mean? If you were in a breakout lesson that I did on the bootcamp, then you know what I mean. If you didn't see it, go back and watch it. But with a breakout, what I mean is this. So let's say this candle, for example, it's moving undecisively on the top of this support zone that it is now. Let's say it decides to dump a little bit and it closes. The candle, the body is closing underneath the support zone. We have a breakout. This is a resistance zone now because we have broken through, so we have switched the table. Now we want to see that breakout, and we want to see the next candle come and test this level. Is it going to break back in again, or is it actually going to reject this zone as resistance, so that we got a confirmation for our sell? So now we want to see a breakout either in this direction or this direction before we considering anything. So it's ranging. Now we're in a ranging area. Now a ranging area is really nice to take scalps in. I like ranging areas when I scalp, but as I mentioned in previous streams, I don't do scalps on the streams because the streaming lags too much. So what I'm saying comes out on YouTube to your ears after about 6-7 seconds. So that is too long for me to be able to scalp live with you guys, because during those 6, 7, 8, 10 seconds, a lot of things can happen in the market and the trade is already gone. So I see no trade here. Let's see what Monero tells us. Maybe we got something for gold on Monero. Oh, snap. All right, let's look at I'll go for this one. Oh, snap, we got a lot of patterns here. Let's look at, we're in a 4-hour time frame. Okay, so we got buy and sell patterns. All right, let's move some of them. We got the Gartley, we love that. Let's remove Cipher. Let's remove Deep Crab. I can't even remove the bad pattern. Okay, so that's an old one. Let's see what we got here. We got a new one. Okay, interesting. Let's leave these two. All right, so Manara on the 4-hourly time frame, so on the bigger time frame, it shows us this. Let's remove this one and let's remove, there it is, triangle. Okay, perfect. All right, so Manara has scanned a crab and a bat pattern, a bearish crab and a bearish bat pattern, but the pattern isn't finished yet. It isn't complete. So what is missing? What's missing is the market moving up and hitting. Oh snap! That was a bad color. Moving up and hitting this or this level, hitting both these levels. So that would actually complete the crab or the bat pattern. And for that to happen, of course, market has to go up. So for the bat pattern to be completed, market has to hit 1882. Now, what I like about this is that it's confluently with 1880, basically, US dollar price target for gold. And we know that gold loves to hit round numbers. By the way, we're having a breakout we're looking at soon. We know that gold loves to hit round numbers and reverse from them. So we have the 1880 as a buy price level, as a buy price price target. That means basically that if we believe the market is going up, and this is definitely a level to look for, and to look for a reverse for a sell. Now, for us to look for this buy, first off, as mentioned previously, we need to see this breakout happen in the correct direction, because right now it broke out, but it broke out for a sell, and it's moving downwards to the sweet spot. We need to see a breakout in this direction, right? We need to see the market moving up. So right now we ain't got no confirmation for a buy up to the target, but we might have it when market reaches the sweet spot. This is the sweet spot, because we know that market loves to hit the sweet spot, pick up liquidity, and then move up again. So when it comes to gold, I'm not looking for any trade right now, but a possible trade that I would look for, but then I want to see more confirmations, is a buy from this target, from this area. And that would be a buy. And as you see, there's a lot of support there. In the meantime, what can we do to be even more precise? We can pull the Fibonacci from here, from this swing bottom. Take this whole sequence, measure it from the top, and confluently with the bottom. No, sorry, with the entry, with the top of the sweet spot zone, confluently, what do we have? We have the demand zone. So we have major demand here. So I would argue that the price of gold needs to come all the way down here, maybe chop around a little bit, and from here we can see a buy. Okay, so what we do is we mark out this zone to keep an eye on it. I'll post it in the Telegram channel. So you guys have it and can watch it. That's that. Yeah. I'll try to keep it as clean as possible so it doesn't get confusing for you guys. You know what? Let's just do it like this. And then let's remove this one. Even this one. Just to make it cleaner. Alright? This is what we're looking at. Entry here somewhere. Stop loss. We want to put stop loss underneath here, but that's a big stop loss. And that will mean for this to be worth a try. We're aiming for the big targets. And where did we say that the harmonic scanner spot us an entry? We'll finish this pattern up here. Now that's a major trade. That's a trade of 267 pips. 267 pips with 43 pips in stop loss. So 267 pips in take profit and 43 pips in stop loss. But we ain't there yet. This is a possible trade that we see. So we're leaving it like that for now. Let me see how I can post it in the signals channel for y'all. Remove this. Yep. All right, it's posted. Now let's see what happens with that. This is a major, major trade. I could actually see the market coming down even further to the demand zone here before doing this move. So basically, we're going in for a buy either here or here. All right. If this level, if 1820 until 1825 doesn't hold as support for gold, trust me, we're going to see the market dip all the way down here to the sweet spot, to this big sweet spot zone. And yeah, end up somewhere between 1750 and 1890 US dollars. So that would be a major sell. But that is if those levels doesn't hold. First, we need to see these how the market reacts to these levels. To the sweet spot here, this yellow zone, and to this red zone here. All right. With that said, enough of gold. Let's take a quick look at the Euro USD before we do anything. Let's look at Manara. All right, what does Monero got for us? Got a lot for us. A lot of sell. A lot of sell. A lot of sell. A lot of sell. Let's see. Okay, wait 1 second. And this is on the 4-hourly time frame. Let's look on the hourly time frame. Everything is pointed towards a sell. We got strong sell confirmation on the hourly time frame. Interesting. All right, so let's start with the crab pattern. Oh, sorry. Let's remove all of these and just have the crab pattern. The crab pattern is looking for a sell. Oh, from 1.092. We got a way to go before we're there. This one is more interesting. Here we have two patterns confluent, almost confluent. All right, so cipher, the harmonic cipher pattern and the harmonic deep crab pattern are both pointing towards a zone that is between 10760 and 1.0760 and 1.0790. 1.0760 and 1.0790. Let's mark it out. Oh, 760. And what was the other one? 1.0790. Now, look how convenient this is. So, this is a deep crab and the cipher pattern. I think it was a cipher, right? Yeah. So this is a deep crab and the cipher pattern entries for cells. This is one cell and this is another cell. Now, when you're looking at it, and this is what Monero scanned for us. Now, when we're looking at it, what do I always say? We want confluence. We want confirmations on that this is a possible trade scenario, right? So let's look if we got some confluence in this. First, let me play a little bit with Fibonacci here, just to see. All right, cool. So we came into the sweet spot. We broke below it. We tested it as resistance, and I'm moving downwards now. Perfect. Confirms the downtrend. And what downtrend am I talking about? I'm talking about this trend that you see right here. Oh, snap. All right, so this is the downtrend. And looking at this trend, look. So we had this sequence here, this swing down to this bottom, right? Pulling Fibonacci on that swing. What do we get? Sweet spot zone, demand zone. Now, tell me, the entry for the deep crab, I don't remember if this was the deep crab or the cipher pattern, but for this harmonic pattern, the entry for the sell, where is it? Exactly at the supply zone. We got major supply here. and the other harmonic pattern gives us an entry for a sell exactly above that one, that pattern. So let's book Fibonacci from this top to this bottom and see what that gives us. What does it give us? More co-influence. More co-influence, showing that this is a possible reversal zone for the market and a possible price target for a buy in this case. Let's see if we can get more co-influence on this so that we actually can enter a trade. So this was the last swing. Now what am I looking at? I'm looking at this swing. From this bottom, not this top, but this top here. Just check the 4-hourly time frame quick. My trading view be lagging a little bit. I don't know what's going on here. Trading view ain't cooperating with me. Let's see if I can bring it up again. Oh man, this is slow. All right, but everything is still there. Perfect. Cool. All right, so what we're looking at now is, come on. Guys, I don't know what's going on with TradingView, but it ain't cooperating with me right now. It doesn't seem to want to load. Let's go back to Manara and do it from there. Oh, it just came. Perfect. Nice timing. So, we're looking at this bottom and this top here. We're pulling Fibonacci from that bottom to this top. And what do we get? We get sweet spot zone right here. And what do I always say? This is what market likes to chop around a little bit to decide for a new direction. And this is exactly what has happened. Market got stuck inside the sweet spot zone, and right now it broke out. So let's see if we can get a retest. This is a breakout, a clean breakout. Let's see if this candle has 5 minutes left. Let's see if it closes underneath and gives us a nice retest of this area. In that case, it will signal a sell, and the first target for the sell is the demand zone that we have here. All right. So let's see if that happens. If it comes to this demand zone, from there I will look for a buy. And what is it? What are the levels for a buy? What are the targets? Well, we spoke on it exactly. This is what Manara called out for us. These levels that are perfectly confluent with the major supply zone that we have up here. So I like this. We got 1 second. We got you see how perfect this is? This is so perfect. So look, what do we got? Co-influently with this supply zone. This is the supply zone from this swing here. Confluently, we have the Fibonacci 61.8 extension from this bottom to this top. Pulling Fibonacci, the extension, the 61.8 extension is perfectly confluent with what? With the supply zone and with the harmonic pattern that Manara called out for us. So we love confluence, and this confluence shows us that we have a nice sell entry up here. And as I always say, what do I say? Let the market come to you. Don't chase the market. This is a perfect scenario where we let the market come to us. So down here, we want to see what happens in the market. We want to see what happens. If it comes down here, then we're going in for a buy. It's a very good buy zone. If it doesn't, we want to see if it gives us a breakout from this area where it's ranging right now. It's ranging majorly right now here. So we want to see a breakout. If we see that break of this structure, then we definitely aiming for this area. And here we're aiming for a major sell. So this is major moves that we're looking for. It's not even day trades. It's almost, I would argue, almost swing trades. Now we can call it day trades. With that said, I don't see any attractive opportunity right now to enter the market. So we're going to leave it like this. And I'm monitor this and send the trades out in the signals channel. Tomorrow, we dive in deeper into candles, looking at candle patterns, and hopefully also some nice trades. With that said, I'm Jay Real from the Free Minds, signing out. Wish you a blessed day. Stay prosperous.